CK with Master Wealth Builders LLC, and the only thing I don't like about videos is that I don't have that personal relationship, so it was easy for you to keep scrolling. But the purpose of the video is to try to give you some information about insurance that maybe you didn't know. So today I wanted to talk to you about the difference between private self-directed insurance and employer-provided insurance. So number one, if you didn't know, your insurance provided from your job doesn't go with you when you leave your job. There is a process where you can ask for the group insurance to be converted, but you have to ask HR that within 30 days of you leaving your job. But the real issue is your employer provided insurance does not come with things like living benefits, which just means that while you're still alive, you can access a portion of the face value of your policy in the event you having something triggering that request. So example, if you get hit by a car while you're at work, if you had private insurance, you basically call your life insurance company, submit a claim, and then they will ask for paperwork supporting documents, and then you can access up to 80% of the face value of your policy. So if you had a $100,000 policy, you can access up to 80% of that. So that's number one. Number two, your employer life insurance is only valid if you die while you're still employed with that company. You're not in a tax advantage situation with that insurance. With private insurance, private life insurance, you can put yourself in a tax-free situation. So if you need to access your money through a loan or through a accelerated death benefit, then guess what? It's tax-free. So that is another reason to have private insurance. You probably will have one of these qualifying events, and it doesn't apply to you if you're only relying on the insurance at work. And then number three, the ability to borrow against your life insurance policy when you need it. The one at work doesn't accumulate cash as you pay into it. A private policy, if it's indexed annuity or indexed universal life, will build cash value that you can borrow against for whatever reason. You need to pay for college, buy a car, down payment on a house, open up a business. You can borrow against your policy. That doesn't apply to the one that you have at work. This doesn't. So those are three main reasons, and if any of those things make sense to you, then use the link in my bio down below. Schedule a Zoom call. I will show you a personal illustration, because what I do is I customize something to your needs. If you say I can only afford to pay this amount, then we'll get as much coverage as we can for that amount. If you say it's important that I have this amount of coverage, then we will find you a policy that has you that amount of coverage. Anyway, I'm here to help those who want to be helped.